Hey everyone, Braden here coming to you with a breaking Disney news update on Disney's fiscal 2023 Q2 earnings report, which just happened. We had the earnings call where we got to hear the latest from the CEO, Bob Iger, as well as the CFO on the financial state of the Walt Disney Company, as well as the company's future outlook. This earnings report was especially surprising as it wasn't the sort of we knocked it out of the park tier earnings that we've gotten used to seeing year after year here, because the way these quarterly results are done, it's comparing to the same quarter in the prior year. So as you can imagine, when Disney was comparing to 2020, where part of the time all their parks were completely closed, or when they're comparing to 2021, where there were capacity limitations and some of their resorts were still closed, and also the theatrical slate was still starting to get back revved up, it was very easy to top those numbers. And that's not to say Disney didn't post some respectable numbers here today. In some specific areas, they did. In particular, the great performers were the international parks, as well as Disneyland, those being properties that lagged behind Walt Disney World in their return to normalcy, in their return to normal operations, normal attendance, guest revenues, things of that nature. The big dog, though, Walt Disney World, it saw a decrease in earnings results, and after hours, Disney stock is down over 4%. So investors were not too thrilled with what they heard. According to the earnings report, Disney says, quote, "Results at our domestic parks and resorts were slightly unfavorable to the prior year quarter, as a decrease at Walt Disney World Resort was largely offset by growth at Disneyland Resort. The decrease at Walt Disney World Resort was due to higher costs, partially offset by increased volumes. Higher costs reflected cost inflation, increased expenses associated with new guest offerings, and higher depreciation. The increase in volumes was due to attendance growth and higher occupied room nights. Increased operating income at Disneyland Resort resulted from growth in attendance and guest spending, partially offset by higher costs. Higher guest spending was due to increases in average ticket prices and average daily hotel room rates. The increase in costs was primarily due to higher operations support costs and increased costs associated with new guest offerings. Compared to Q2 last year, Disney's media division saw revenues growth of 3%, and parks saw a 17% jump. As I said, the revenues from the international parks and also the cruise line. The cruise line's been doing very good. They were particularly impressive, which is why there's still this growth happening, despite Disney saying that Walt Disney World's earnings are decreasing. Where it really gets interesting is if you take a look at the income for each segment. The parks brought in 23% more income compared to this time last year, which is quite impressive. The studios, though, a 42% decline. The studios put in almost half as much income to the company as they did this time last year. Looking more granularly at this, we can see the big loss was at linear networks, where Disney attributes the loss primarily to the advertising drought, the decline in advertising revenue, where right now ad money is drying up as companies across the world tighten their spending in an attempt to continue to show good earnings as their growth margins become slimmer and slimmer and harder to achieve. Getting to the earnings call, CEO Bob Iger started the call by giving a shout out to Universal, which was quite strange. The studio down the street, he started by shouting them out, patting them on the back for their success with the Super Mario movie, saying it gives Disney hope for theatrical releases in the future. The fact that so many showed up to theaters to watch Super Mario, it gives Iger hope for Disney's future releases at the movie theaters. Perhaps Disney should do some soul searching as to why people are all showing up in droves to watch Super Mario, but not so much when it comes to many of Disney's recent theatrical releases. Disney likes to blame a lot of that underperformance on, oh, consumer behavior has just changed, it's not our fault. Yet other studios are releasing films that are driving those consumers whose habits have supposedly changed right back to theaters. So I think think that's what Iger was alluding to there, where it gives him some reassurance that if you create the right thing, people will show up to the theater. That's Disney's issue, though, creating the right thing to put in the theater to get the returns that Universal is enjoying here. I can't play you a clip of this because it's the entire earnings call, but throughout the call, there's this general tone of we are on a bumpy ride and we are going to continue to be moving forward. The CFO was naming all sorts of expenses related to severance as well as streaming impairment charges, all these costs that cumulatively extend into the several billions of dollars, and some of this will be showing up on next quarter's report, she says. And then also when it came to the segments, as I showed you guys, ad revenue is not good and the prospects of it improving aren't there. Then over at the parks, which has held this whole ship up for a long time here, it continues to show growth and bring in tons of money to help cover all these losses on the media side and streaming side of Disney's business. But the juggernaut there, Walt Disney World, it is starting to show signs of weakness, where despite Disney managing to fill up their hotel rooms at Walt Disney World, managing to milk us for all the money in the world, they still saw a decrease in earnings versus last year. And the reason that's scary to the investor is because the continued growth at the parks, which is really the linchpin of the entire Disney operation, it really hinges on their ability to continue raising prices on their loyal park goers, on families. So the fact that they did that successfully here, we ate all these price hikes and it still couldn't save the earnings results, that casts doubt on the effectiveness of this strategy moving forward, and in particular raises the question of how much more can Disney even raise prices at the parks in this economic environment where families are tightening their belts. So I hope that helps paint a picture for you as to why these earnings results are not being well received by the market in after hours trading here. Also, it should be pointed out with the parks, Disney is saying, hey, what's saving us here is that we're raising prices. They're basically saying price gouging is what's keeping us going here, which I'm sure is something that Walt would really love to hear. Price gouging families, that sounds absolutely awesome and really gets to the core of Disney, right? Then for our viewers who love the Reedy Creek drama, of course Iger was asked about it, so here is the latest on what the CEO had to say regarding the Reedy Creek situation.
Regarding Florida, I got a few things I want to say about that. First of all, I think the case that we filed last month made our position and the facts very clear, and that's really that this is about one thing and one thing only, and that's retaliating against us for taking a position about pending legislation. And we believe that in us taking that position, we are merely exercising our right to free speech. Also, this is not about special privileges or a level playing field or Disney in any way using its leverage around the state of Florida. But since there's been a lot said about special districts and the arrangement that we had, I want to set the record straight on that too. There are about 2,000 special districts in Florida, and most were established to foster investment and development, where we were one of them. It basically made it easier for us and others, by the way, to do business in Florida. And we built a business that employs, as we've said before, over 75,000 people and attracts tens of millions of people to the state. So while it's easy to say that the Reedy Creek Special District that was established for us over 50 years ago benefited us, it's misleading to not also consider how much Disney benefited the state of Florida. And we're not the only company operating a special district. I mentioned 2,000. The Daytona Speedway has one. So do the Villages, which is a prominent retirement community, and there are countless others. So the goal here is leveling the playing. If the goal is leveling the playing field, then a uniform application of the law of or government oversight of special districts needs to occur or be applied to all special districts. There's also a false narrative that we've been fighting to protect tax breaks as part of this. But in fact, we're the largest taxpayer in Central Florida, paying over $1.1 billion in state and local taxes last year alone. And we pay more taxes, specifically more real estate taxes, as a result of that special district. And we all know there was no concerted effort to do anything to dismantle what was once called Reedy Creek Special District until we spoke out on the legislation. So this is plainly a matter of retaliation, while the rest of the Florida special districts continue operating basically as they were. And I think it's also important for us to say our primary goal has always been to be able to continue to do exactly what we've been doing there, which is investing in Florida. We're proud of the tourism industry that we created, and we want to continue delivering the best possible experience for guests going forward. We never wanted, and we certainly never expected, to be in the position of having to defend our business interests in federal court, particularly having such a terrific relationship with the state as we've had for more than 50 years. And as I mentioned on our shareholder call, we have a huge opportunity to continue to invest in Florida. I noted that our plans were to invest $17 billion over the next 10 years, which is what the state should want us to do. We operate responsibly. We pay our fair share of taxes. We employ thousands of people. And by the way, we pay them above the minimum wage, substantially above the minimum wage dictated by the state of Florida. And we also provide them with great benefits and free education. So I'm going to finish what is obviously kind of a long answer by asking one question. Does the state want us to invest more, employ more people, and pay more taxes, or not? Thanks.
So everybody, that's going to do it for us here today. Stay tuned for a big Epic Universe construction update. I just got a bunch of brand new footage and I want to get that out to you guys as soon as possible. And then once all this is out, then I'll finally be able to knock out that Brightline video. So needless to say, lots on the way. Make sure you're subscribed with those notifications on. Thank you guys so much for watching. From the Mickey V's Magic Studio, this is Braden. Have a magical day.